Hi there, I'm Malcolm Grahamwood, and today I'm at Core Finance doing my CEO interview slot. And today my guest is Steve Bowler, who is the CEO of IGas Energy. Hi, Steve. How you doing?
Hi, Malky. Nice to see you in person.
Yeah, great to see you again. Back in the chair. Thank you very much for joining me. So, obviously, normally I do ask people to do a bit of a rundown on the company.
Yeah.
I'm not going to change that much, but what I'm going to say is that we all know a lot about IGas. But like a lot of other companies, things have changed dramatically in the last year. Yeah. So perhaps an overview, of where you've come since, a year and a bit ago when the oil price crashed out.
Sure.
Great.
A lot's happened, hasn't it? I mean, what a year. I guess sort of start with the oil price crash. And I think the advantage we had is that we own and operate a lot of our sites.
Yeah.
So we do have a high fixed cost base on some of them. But we can be very proactive because we own and operate them. So when we saw the oil price crash, what we did, we cut CapEx because we don't have a lot of committed CapEx. We kept two projects going, two water flood projects going, and some of our higher operating cost fields, we shut them in because we could, and then we brought them on later in the year. And then we had a range of cost saving measures. We shut the London office. Fortunately, the lease was coming to an end, and some other cost-saving measures. So, that helped us tremendously, and it was obviously, like for anyone in the industry, it was a very challenging period. And what we had to do was look after our staff and contractors and keep them safe. And I think the way that they all reacted to it was exceptionally good.
Yeah.
Very proud of how everyone reacted to it, and touch wood, we got through that period without too many issues, and so that was the initial phase, I think, and then moving forwards, we were still very busy from a business development perspective. We bought GT Energy in September last year. I'm sure we'll come back to that later, and we signed an MOU with Biotech on a couple of hydrogen projects. So that was good. And then towards the end of the year, updated our CPR. So we improved reserves by 250%.
Yeah.
And under the CPR, our MPV10 on a 2P basis is $200 million at $60 inflated or thereabouts. So still a lot of value in the business. So as we've started this year, I think budgeting process at the end of last year was pretty challenging for everybody. Pick a number, but we picked $50 to budget for this year. I think what helped us last year was the hedging. So we hedge half our production. It will hinder us a little bit this year, but obviously very much countered by the unhedged 50%. So we're in a good place and moving some projects forwards. But I think still treating some things cautiously because there's a huge amount of volatility out there.
As you have to at the moment. Thanks for sorting out that hedging, because I was about to ask that anyway. So that's sorted out, and you've always had a good reputation on hedging, and so that sorted that out, which is great. I think the most important thing, as you just alluded to, is to talk about geothermal. You're one of the few independents who have actually taken a big step and a meaningful step, and you've committed to buying a renewable business, and geothermal and Stoke-on-Trent and so on was something that we all looked at straight away. So I guess the right thing to do is to say, what progress are you making? Where have you got to? Any surprises, any disappointments? How's it look?
Bit of both, as ever at the moment. I think we saw some delays from Stoke-on-Trent during the second half of last year. So they are the ones building out the heat network. So they paused that to focus on all of the issues around COVID, as you'd expect. So we've seen a little bit of delay there. And actually, we expect a third party will step into the shoes, probably Engie, to take over the build out of that heat network. So for us, that'll probably be a positive, actually, because they are experts in delivering all of that. So I think, that's a slight negative. We've now got the planning approvals through, back through quite recently. And I think really on the very positive side is the amount of incoming we've had. So, when we thought and valued GT, it's really around the Stoke project. But with all of the councils and a lot of people wanting to decarbonise heat, and with big council buildings and all of that sort of thing, you can't do ground source heat pumps or air source heat pumps because they're not well enough insulated. So people are really trying to think, how do we decarbonise our heat? It's after all, it's 40% of UK energy. So councils and other large users are very keen to explore it. So we've started speaking to some other councils across the country. So that very much on the positive side, but some slowness, I suppose, with the Stoke project itself. But it's still, now we've got the planning, we need to get on with the EA permits, refresh those, and then we've got a shovel-ready project.
So, I mean, it's always interesting that, probably like always, that what happens is that central government comes out and says, because we're going to hit this target or that target or whatever, within 20 or 30 years, no one's going to have a boiler or a gas boiler or a gas oven or anything else, and then leaves it to people like you and local government. So, is it central government you need help from here,
Yes.
or how do you want that to work?
We would really like in some so there was a renewable heat incentive, so that was £55 a megawatt hour for geothermal and others. That ended in March 21. So we would like a form of funding that brings that sort of money for us.
You were asking to be guaranteed.
That's what
for what? Yeah.
Yeah, that's what the renewable heat incentive was on delivery of renewable heat, which geothermal is absolutely. Then central government would pay £55 a megawatt hour.
And given that central governments, and not just ours, around the world, when faced with this on nuclear, admittedly it's presumably a longer term thing, they've been very reluctant to guarantee longer term, even though they're the ones who asked you to kick on with it in the first place. Yeah,
they have on nuclear, haven't they? They guaranteed £92.50 a megawatt hour. That's now 110, 120. So, that and it may be that we have it in a different shape, which is a CFD, which is how wind started. And if you look at other countries,
I was going to say, how do other countries?
There are incentives in Holland, which is sort of slightly ahead of us in terms of geothermal. And then where you've got more established markets like a France or a Germany, in Germany at the moment, it's around €200 a megawatt hour. So significantly in excess of that. We don't need that help to make the economics work, but we do definitely need some help.
So, are you looking to scale up the geothermal part of IGas business? Are you looking to buy other sites, to do other things?
We'd like to. Yes, we're speaking to Southampton Council, where they already have a heat network, Bournemouth, Manchester, Newcastle, and others. So, there's always, of course, a lag as we move things forwards, but there's definitely incoming that we can respond to. There's council sites that are available. So, yes, you should expect us to move those things forwards, but it's all dependent on support from central government.
Yeah.
But if we have that, then absolutely we can get after these projects.
And in terms of cost of entry, management time, a bit of money, it doesn't sound like it's enormously expensive to business to start in, but you need the carrot at the other end with the
well, I think sort of takes us back to why we had a business combination with GT. Really, I've known Porrig, who's the MD of GT Energy business, for quite a few years. He'd progressed a project to a good place.
Yeah.
But then you need execution.
Yeah.
And that's really what we brought to GT Energy, because you need, drilling, planning and permitting, comms, then into operations, etc., etc.
So, Steve, tell me, how important is this ARIT report, which has been getting a lot of publicity in recent weeks?
Yeah, it was a good report. We endorsed it, as did other oil and gas companies, and as did Greenpeace. So, that's extremely positive, I think, as they should. It's renewable energy. So the ARIT report really sets out the opportunity set with support from government, and really so that their belief, which we would support, is that you can get up to 12 projects a year across the UK, which is sort of about half of what Holland are going for. Yeah. And there are already 30 operational sites in Paris alone. or 40, sorry, and 30 in Germany. So I think it's a very achievable objective.
Yeah, it's not like some things where people think that you're doing something which hasn't been done before, and therefore,
No.
you're trying to do something. And just tell me, which part of government is responsible for this? Because is it energy, or is it the new department, isn't there, for climate change or various things? Who's your minister?
Bays.
Yeah.
Yeah, so energy and industrial strategy
That's
is our
still-
main relationship, really. But
Yeah.
yes, there are quite a number of different sort of sub-departments within
Yeah, and there's a big conference at the end of the year on climate change, which
there
everyone's-
is, which we'd love to be up and running
Yeah,
and
why
going
not?
forwards at Stoke with the right support from government.
Well, geothermal sounds interesting, potentially profitable, and good luck with that. Should we move over to hydrogen? So your existing site on hydrogen, tell us how it works from there.
Yeah, so it's at Albury, just outside Guildford, as you know. So we already produce gas there. So that's been happening for a while now, a few years. We do gas to grid and we do gas to wire, so into electricity and into the grid with SGN. So we've been looking at the economics and how that might work for hydrogen. There is a demand for hydrogen already. It's quite nascent, but there is definitely principally for sort of large like buses and things like that.
Red or green?
All grey. Yeah. So there is for buses, there is definitely an offtake. We're discussing with a number of different offtakers, and it's a modular system. So we turn methane into hydrogen. There is a byproduct. So at the basic level, it will be grey when we get into the colours.
Yeah.
But if we find an offtaker for the CO2, that obviously makes it blue. So we're looking at all of those options at the moment. But from when we look at the economics, monetizing gas by going to the modular hydrogen system is better than it is going gas to wire or gas to grid. So that's our project.
And that'll be at the site.
That's at the site. It's 1,000 kilos a day. Normally, their modular system. And at Albury, that would mean that we when we're operational, we have 4 HGVs going in and out of the site every day.
Yeah.
But very positive. There are some local companies that want hydrogen.
I was going to say, with the marketplace
displaces diesel. So
Yeah.
for them as a vehicle fuel. So I think it's really exciting. It'll be good.
I mean, you're not going to be
going
going to fill up your carbon hydrogen at the petrol station, but they might fill out the bus or the lorry or the van.
Well, an HGV will come in and then take it away to a fueling station.
So it would be.
Yeah.
And pricing?
Pricing, it's a bit early to say.
Yeah.
But it's. I don't really want to say too much on that,
I
Marky, as
understand
we
that,
work our way through our
Yeah.
discussions with the off-takers. But, it looks much better than gas pricing. And then, we've got another project. So that's in consultation. Once that consultation finishes, we'll go forward with the planning. And that will conclude in July. So we'll go through with the planning on that. And then we start consultation on the next site.
So basically, anyone where your gas wells are, that's a natural move to hydrogen.
Yeah.
Appropriately, with no risk of anything going wrong or anything else, and it's just the same way as a gas well would have been.
Yeah. Different facilities above surface, but exactly.
So that obviously leads to the next question, the same as I asked about geothermal. You've got a lot of sites you're still looking, so you're at an earlier stage than you were with that, but you're in a strong position. To sort of work it out through the system.
We're looking at all of our sites, really focusing on our existing sites. What else can we do on those sites? I think our core skill set, we are an operator with a good reputation, which we want to maintain, and at 90 sites across the country. So what else, where we've got grid connects, what else can we do with those? Batteries or solar. But it doesn't take away from our core business. We're not moving away from that.
Yeah.
We're adding to that.
So to put all that together, right from the start of our chat, I'd be interested to know where you think bits and pieces of the firm are looking. I mean, at $75 oil, you're comfortably above your 50 where you work through everything on the budgeting process.
Yeah.
You must have therefore a lot of decent sales. You've got hedged. You've got things you've reopened since the oil price fell. You've got the all the various geothermal, and you've got hydrogen. How do you put that together in terms of a sort of profitable yet?
Just try and do it as simply as possible, maybe, really, for me. So, depending on what the FX is, I think our OPEX per barrel last year was 33. So it's moved against us a bit. So call OPEX $35 a barrel, G&A of about 6 or 7. So that takes you to the early 40s. And with and our costs are they are to the detriment of the business when the oil price falls dramatically. They're quite fixed, but to the benefit, we're very leveraged into a higher oil price. So, if we're producing about 750,000 barrels a year, and you've got it's at 70, looking forwards, then that's $50 million of revenue. And we do have some hedging for this year, but as we look forward to next year, then we start to make some good money, and we will do in the second half of this year.
Good stuff. So how do the finances look? Where's the balance sheet and the debt and so on? How's it all?
We did draw a bit of debt last year, as you'd expect. So we ended the year with about just over £10 million of net debt, facility size of 20, so comfortable. And we don't want to draw particularly too much more debt. So it's finding that balance. So we in our budget we've got about £5 million of capex. Which is comfortable for us, and we'll just keep that under review.
You did a good deal at a good time on the debt, didn't you? So before, I mean, and you've got sort of some big shareholders, strong supported shareholders led by Kerrigan. You've got 28 or whatever it is, and a number of others.
That's right.
And how they all approaching not just being invested in an oil company. But also in being invested in a geothermal or a hydrogen. Presumably, they're all very happy with that.
Yeah, I mean, Kerrigan sit on the board, so they have their input at that level, and we've got our top 6 shareholders own about 75% of the business. Yeah. So obviously, as we go through the announcements and those sorts of things, we speak to all of them and more. And I think it's always that's a good place to be moving to. It gives longevity to the business, but really focused on the numbers for the oil business and the oil and gas business, but I think it's where a lot of people want to go, and I think we're well positioned to take part in all of that.
No, brilliant. Before I sort of finish, the one question I've got to ask everybody in this day and age is concerning ESG and the various bits of that. You I'm sure you'll have something to tell us about how IGas are handling that particular position, but probably more importantly because the geothermal and the hydrogen probably makes you a better ESG when people are doing their guidelines. So talk us through ESG at IGas.
Yeah, I mean, it's obviously very important, but it's not for me the driver of the business. That the business has got to make money. But at the same time, a good example would be the water flood project where, we're driving down OPEX and we're driving down emissions on those water flood projects by the engineering that we've done. So there are definitely opportunities to improve that side. Geothermal, when that's up and running, obviously will sort of very much benefit us on a per barrel type of metric, and we are reporting, and we have in our latest annual report reported our emissions, and then hydrogen, depending on the nature of the offtake, we'll see what that does to us. So I think but for me, it's very, even in the climate change report, under any scenario, what we're in the UK, we are not generating enough supply to meet our demand.
Yeah.
And any which way you look at it, indigenous production is better from an emissions perspective than importing it from overseas. So I think people shouldn't lose sight of that.
Yeah.
But
good point.
We're going to sign up to the UN Global Compact, and so there'll be more disclosure for us, basically. And we look to drive those down on a per barrel metric.
Excellent. Well, we've covered pretty much the whole of the waterfront. At the end of the interview, I'll do what I always do and say, putting everything together that we've discussed, and we know what your view is on budgeting and so on. Where do you see IGas being in 12 to 18 months' time?
Yeah, I'd like to see us with maintaining those production levels, if not increasing them into next year. This year is more challenging to increase them. So that side, but reinvestment back in the business on oil and gas side, particularly where they're existing sites and they can pay back quickly. So that's where we are focused. In terms of the geothermal, we would like to be drilling wells in next year and have this one of our sites operational into the next year. And really, I can see that business growing, one site per year over the next couple of years, and then a couple of sites per year going forward. So that, and then the hydrogen, we would like to see production of hydrogen at one of our sites next year. So I think that will then start to really demonstrate the changing shape of our business. And I think, those two other elements can really start contributing materially to the business in 5 years.
Sounds very impressive. Steve, thank you for joining me today on my guest CEO slot.
Nice to see you.
Thank you for coming in.
Thank you.
It's been Malcolm Graham Wood doing the CEO interview for Core Finance. My guest today has been Steve Bowler, CEO of IGas Energy. Thank you very much for joining. Looking forward to seeing you again soon. Bye now.